What's ahead of the Fed is a big, tough decision. Policymakers at their next meeting will have to make a decision as to whether to move ahead with more stimulus or not. In fact, we'll hear this afternoon just what the Fed's latest read on the economy is when the Beige Book is released at 2 p.m. Eastern. For some perspective, I want to bring in now former Fed Governor Lyle Gramley. He's currently a senior economic advisor at the Potomac Research Group. Mr. Gramley, welcome to In Business. It's been said that this is one of the more controversial Fed meetings to take place here. Is the controversy whether to act or just how big QE will actually be?
No, it's whether to act in another large-scale asset purchase round. The first time they did it, the economy was looking over the edge of the precipice. So it was not too difficult for policymakers to decide to go forward with that. But we've backed away from that precipice. The economy is growing slowly, but there's no danger of an immediate recession. And there are plenty of people on the Fed who don't like the idea of adding another $500 billion or $1 trillion more to the size of the Fed's balance sheet.
Well, from your perspective, do you think that the right move, if QE is taken on, is to start with sort of piecemeal $100 billion purchases over time, or go with the so-called shock and awe campaign?
Well, I think as long as the Fed announces that they're prepared to buy, let's say, 100 or 200 million a month, and then to accelerate it if they don't achieve their objectives, they want to send signals to the market that they're prepared to buy large amounts of Treasury issues to push long-term interest rates down. That message has to get through one way or another.
Just a few months ago, we were talking, though, about the Fed trying to unload assets, and now we're talking about them trying to take on new assets to the balance sheet. So is that sharp of a turnaround in such a short time justified from your point of view?
I think it is justified, but it's not easy for the Fed to make that decision. I think it's going to be a very close call. I think the Fed will go ahead and announce something, but there are going to be plenty of people on the Fed that are going to object to that.
And what's the significance of that split to you? I mean, when you start to see within, the narrative coming out of the Fed that there was such a degree of controversy and disagreement, does that undercut the fact that a decision was made? Does that add uncertainty to the picture?
It adds a little, but as long as the bottom line is that Bernanke has the bulk of the FOMC members behind him to go ahead what he thinks is correct, I think markets will accept that the Fed still is going in the right direction.
You know, the Fed also has this mandate of trying to help out with unemployment here and to create jobs. Do you think that come November 3rd, when we see the congressional elections and we get this decision from the Fed, that there will be more clarity on that front? In other words, do you think that the fiscal and legislative processes are stymieing the efforts of the Fed here?
Well, I think it's pretty clear that fiscal policy is hamstrung by the public's attitudes towards the huge deficits and unwillingness to spend more. And that puts the Fed on the hot seat. The Fed is the only game in town. And what we're looking at is an economy that's suffering from an enormous hangover from the financial crisis that was the worst since the early 1930s. There isn't any magic in what the Fed's going to do. And one of the difficulties of making the decision to go ahead with it is that everyone recognizes that the benefits are relatively minor, and there are costs, and they have to be balanced very carefully.
All right. Well, Mr. Gramley, it's always great having you on the show, and we'll have to see just what happens come November 3rd. Thank you for your perspective.